Hello, ladies and gentlemen. Greg Michalowski from ForexLive.com. This is a Forex quick look. I'm going to take a look at the Aussie versus US dollar. It's continuing its move to the downside and trading here today. It's been a down week for this currency pair, but we're running into some key support. I'm going to talk about it in this video as we end the trading week and look forward to next week's trading. So let's get started. First, reviewing the week, I'm looking at the 4-hour chart. The week started near the highs from last week. You might recall last week we broke above this topside channel trend line. It was defined here. We couldn't sustain that momentum and then reestablish resistance against the old channel trend line and started its rotation to the downside. That move to the downside came right to the key support here. This was a ceiling area through here where the market moved above here and then based against the level before moving to the upside. So it retraced a full move up and back down and then rotated back to the upside. But when we couldn't get back above this level right here at 0.6760, price started to rotate back to the downside. We came back down one more time, testing both the 100 bar moving average and the top side of this channel area right here, bounced higher, and then finally gave way to the downside over the last 2 days. And in trading here today, we continued that run to the downside and now testing a key area down here defined by this swing area going back in time. Also, this green line represents a 200 bar moving average on the 4-hour chart. That comes in at 0.6678. The 50% retracement of this last move to the upside comes in at 0.6686. Finally, this trend line, which was the sister trend line to the this top side trend line right through here, is being tested, and that's where the low price today came right down to it. It's in between this swing area between 0.6676 and 0.6689. So needless to say, there is a cluster of support right here that the market is now testing and trying to hold, and so far it has been able to hold that with the price just above the 50% retracement as I speak. So the question comes going forward, are we going to be able to continue to hold this cluster of support, or are we going to break below that level? And this is a point where traders make up their mind. It's also where the traders have the opportunity to risk a little to make more than a little. And by that I mean that they can lean against this level, for instance, and hope that the price rebounds back up toward maybe this area right through here. So you're risking a break below this level, maybe down to this level right here, and for the potential for a rotation back up toward this area up here, which is our up top side resistance. Conversely, if you are short from above, what you want to hope and what you can also do is if the market should break through this cluster of support, you can look to sell into that break, put your stop above, let's say at this area right here where the 50% retracement, the top side of the trend line, risk this amount on the trade for hopes that we eventually get through the 61.8% retracement and potentially even more, maybe down to this swing area or even to the 100-day moving average. So that's the trade that people face, or traders face, when we reach a key technical level, key level where there's a cluster of either support or resistance, in this case support, and the Aussie dollar is ending the week on that support or looking toward that support. It might not be resolved until next week, but folks, pay attention. That's going to be the key level going forward. My name is Greg Michalowski. If you like this video, give it a thumbs up. If you didn't like it, give it a thumbs down. Also, be sure to comment either on our Forex Live website or on the YouTube channel. It would be greatly appreciated. Good fortune with your trading. Bye-bye now.